Hi. I prefer Lawrence, but you can call me Larry. That's completely
Oh,
fine.
I'll call you Lawrence. Whatever you prefer. So, very nice to meet you, Lawrence. And
It's a pleasure.
normally I start off the interview asking people how they got involved in the industry and what their journey was like. But you have it
You.
in your DNA. You
Uh,
have it in your DNA from your father.
well, when I was a very young boy at the age of 12, well, actually, it was 13 when I received my bar mitzvah money. My father was, a broker, a big broker for Bear Stearns, and I wasn't really a geek, but I had a lot of friends that were, and they were coming up to me and saying, "Oh, Star Wars is coming out. The prequels, the three prequels before." And I went to my father and I said, who makes the toys for these companies? Because I was curious. And my father used to always tell me, buy in the rumor, sell when it happens. So this was about like a year before the movie was coming out. So I went to my father. Hasbro was trading at around $19 a share. So I had around 14,000. I borrowed five from him. He didn't like the stock at all. He hated it. He was like, "This is a dumb idea. Don't even do it."
How old were you again?
13.
All right, so you use your bar mitzvah money to buy Hasbro.
Yes, at 19 a share. I ended up selling it about 3 months before the stock came out at around 33 and three quarters. So I had
Uh-huh.
around 34 grand. My father, of course, let me keep the five. And for about a year and a half, I didn't trade at all. I was a young kid. So let's just say I don't ever buy penny stocks anymore. But at the moment, from 14 to 16, I was looking for a stock under $5 so I can buy some volume. Some actual power in the stock. So I found the stock called Bima Gold at $4.67 a share. And
I remember Bima.
you remember when Kinross Gold bought it out?
Yeah,
Do you?
I remember when it traded in eight.
Exactly. Well, that was the thing. I bought it at 467 at $6. Kinross Gold bought it out. It did a reverse split to $12, and I ended up selling that at close to $25. And that was really my introduction into my own personal trading. I was originally in the brokerage business from the age of 20 to around 24. I mainly worked for my father, but I worked for other companies in the beginning because, I didn't want to walk into my father's office as the boss's son. It's just a bad look, and people would always, question my opinion. So I started out working for other companies, and then eventually I moved over to my father, and we moved to Florida because, New York, the state taxes, the city taxes, it just no longer made sense to pay, essentially 60% of what we made to the government, state and local. So we moved everything down to Florida as independent, and now my father works at a Boca. I'm primarily a writer, and I help him out with his analytics because I'm younger and I literally have his brain and his way of looking at it. We do disagree on many things. Like when oil was taking a big hit, and I had my line at 90, and I was like, if it breaks under 90, we should short it all the way down. And he was in big disagreement with that, saying, oh, oil will stabilize. And of course, oil ended up going down to, I believe, what was its low, 24, 25? And at least he listened to me when I said, let's start buying it now, because I don't, a lot of, the CNBC pundits, whatever they say, they were claiming, oh, oil will keep around this price for a few months, but I didn't see it happening. So I at least convinced him to, buy up oil. But I actually like the ETFs, so I always stick to those.
Are you ever wrong?
Oh, of course, everyone's wrong.
Okay, good. Just want to bring it up because it's kind of like people that go to Vegas. They only want to talk about their successes, and when they dump a bunch of money in Vegas, they come back and they say, I broke even.
Oh, of course, of course. No,
Right.
I've been plenty of times. The thing with me is that if I'm not 100% sure, if my convictions aren't really fully there, I never invest such a large a big portion of my portfolio into a stock I'm unsure of. So what I do is try to keep where I am wrong, and plus my number one rule is I don't get emotional about stocks. I don't really care much for the companies that I invest in. So if I see
Right.
the moving, I have no problem completely liquidating and just moving forward. I believe a lot of investors, their problems is that they get emotional with these companies, like Twitter, right? Twitter didn't produce a single quarterly profit. there is no reason for that stock to be worth, their current price times its outstanding shares. It's just, you cannot tell me a logic, pragmatic reason for why that stock is worth what it's worth. Yet people still bought it. People were still, excited about its IPO. I get it, they have a great usership, but they still haven't figured out a way to monetize it. Facebook has, and that's why initially I didn't like Facebook, but now I'm growing on it.
Mm-hmm.
Everything changes, like
Yeah.
when you first read my tweets, this is a rally that we're seeing in the market, and you have to be always changing with the markets. Yes, my overall view of the market is that it will end up, I see it going back to 2010, 2011 levels, but as of now, we're looking at a rally. So why would you not want to make money during the rally? Is what I'm saying.
Okay, so I'm assuming that besides writing for the Jerusalem Post, and I'm interested in what you cover for them. Is it financial or geopolitical? And besides,
I'm sorry, Dan. I'm sorry, Doc. Can you continue? I apologize for interrupting.
I'm interested in what you cover for the Jerusalem Post, and I'm assuming that besides that, you trade your own account, and that's it. You don't have any type of other business model, or do you?
My father, he wants to actually, he thinks you're a very, very great broker. He looked at a lot of your interviews, and he wants to have his own one-on-one with you because he is an independent broker. He does trade other people's money. And he would love to have a one-on-one, but with the compliance and all that stuff, he didn't have the time to get it through. And plus, me being away, it wouldn't work, between three people. So if you do have a time to fit my father in, I think you would have a lovely discussion with him. We're going to get into some details, whatever you'd like, because I brought up a couple of companies and ETFs that I personally like. I like their charts, I believe they're really great. But the problem is that if you look at a lot of the charts that are in the rallies, they're very quite similar. So you really have to pick and choose between relative strength and another big concern of mine is the foundations of the market. So Goldman Sachs the other day comes out and says, all right, so we're looking at $110 of earnings between the, for S&P. So S&P is currently trading at 2010, right? $2,100. So if you do the math, that's about 19, that's a multiple of 19, correct?
Yes.
Historically, it's between 10 and 20 is a good multiple, right? We're talking about the top end, and that's their prediction. And we don't know if they're right. That's what they're saying. If the multiples are what I personally believe above 25, we're looking at a very, very bad market. We're looking at something unprecedented. I mean, we're looking at 1-2% growth the last 7 years, and one of those years we had 300,000 jobs lost every single month. But besides that, we're looking at 1% growth. We're printing $40 billion a month. I mean, that's stopped, right? But if you want to just look at larger context indicators of why the market looks bad, right? You have your Fed chair come out last year and say, all right, we're going to raise the interest rates 4 to 6 times, I believe she said, right? How many times did they actually raise the interest rates? Once? Yes. And a very, very small percentage of one, not even a whole basic point, basic percentage point. So at the end of the day, if you look at the foundations of the market, it's weak. This is a rally going on, so I would say my advice would be is why not make some money? There are some great stocks. I personally love Home Depot this time of year. I love Lowe's this time of year because it's hurricane season is about to start. If you look at just the charts from previous years, they always do well this time of year, and I always sell before hurricane season starts. So I'm just saying, because if you just look at the overall economy, I believe the stocks are overpriced. Anywhere between 50 to 80%. Of course.
What do you think could be the catalyst for things to revert to the mean that you're talking about? And I think you're talking about 2011 levels. What was that? 1,300 S&Ps at the bottom there?
Yes, well, actually, a little bit higher than that. But
14.
I like the S&P much better than the Dow. I don't use the Dow as the indicator because I believe you agree with me on this. The S&P is a much better overall indicator of the economy. Would you agree with me on that?
Yeah, I think that what's strange here during this rally is normally the NASDAQ would lead in a spec blow-off.
Exactly.
And so far it's only retraced 78.6 of the sell-off, and it almost looks like um, safety is leading. And also the recovery of materials, gold, oil, has been a big part of this rally as
Well,
well.
gold is actually the biggest, asset, in
Yeah.
terms of percentage. So if you're looking at it that way, there are so many indicators. It would take us like 2 hours to go through what, it's like a sandcastle. James Dale Davidson, he's one of my favorite, economists out there, and he had some really great, points to make, especially with the participation rate in the market. Never has the market been, these numbers that we're looking at from the rally of 2010 or 2009 until now. Never has the participation rate, which is technically in essence the volume, been so low in the market. It's literally diverging. If you look at the chart, it's diverging. The market's going straight up, yet the participation rate's going straight down.
Yeah, so I hope James wasn't short, because he's been wrong looking for a debacle, along with guys like Bill Bonner and
I
Jim
100% agree.
Rickards and Mark Faber forever, even longer than I have.
Their problem is that they predict it like next week. You know what I'm saying? They always say, "Oh, it's going to happen right away." That's where they're wrong, because the government is gonna hold the economy together until at least the end of the elections. Because
Okay.
what's happened in the last 7 years is that I see the government playing a much larger role in how the markets are actually. Because if you look at true numbers and true fundamentals, there's no way that you can justify the market being where it's at. You cannot justify to me that that S&P should be at 2100. You just can't. Everything's overvalued. Everything's overpriced. I love the relative strength of certain companies, and it does look good. But in my prediction, these are misrepresentation of numbers. These are not the true facts. Like, for instance, right? Companies are buying back their own shares. That is not a good thing, because interest rates are so low. So it makes sense. Why not? If you're a company, interest rates are low, I'm going to borrow some money and buy some of my own shares back, and basically propel my stock forward. But it's not actual growth. And if you're looking at the number, it's really, they're cutting costs. The top line is not changing, is what I'm saying. If you want to look at actual growth, you have to look at the top line. And their top lines aren't changing. They're just literally cutting costs and finding other ways to, produce, to basically meet their quarterly earnings, what their projected earnings are.
Yes, financial engineering.
Exactly. That's the word my father loves to use. It is all financial engineering. And I'm sure you can see it yourself. Commodities will be a good thing when this whole thing comes down. I think water, wheat, gold and silver will always be great, considering silver and copper are used in so many new technological advances like the iPhone. I mean, every single iPhone has, I believe, copper and silver in it. I'm not sure. But you have to look at it that way. I mean, what are these precious metals going to be used for? Because gold is great, yes. I believe gold will be a protection against the dollar, because look, the dollar has gone down against the yen and the euro in the last couple of weeks, but technically it's still a very strong dollar. It's a way, the dollar being this strong is not good. That's what I'm trying to say. People might like it, but in my personal opinion, it's really not a good thing for America. Not a good thing for the markets, in my opinion.
Okay. So I told you I'd walk you through the screen share. Lawrence, all you have to do is go up to the upper left-hand corner. You'll see a green box with an arrow.
Yes.
And you click that, and then it'll show your desktop, and then you could take us through a few charts.
Okay, perfect. Let me just open them up.
And if you come off camera, you could unbutton your top button on your shirt.
It's a little time.
Relax, an independent guy like you, a maverick like you. You don't have to look like you're a Goldman Sachs guy when you come to visit us, buddy.
No, I'm definitely not. And that's the difference between, I'm not bound by anyone else's opinion. I look at what I see. And, thank God my father, really taught me well. I mean, we do different opinions a lot, but,
sure.
He has 35 years of experience. I don't. Let's be honest. I have the 8 years of experience with technical analysis that he has shown me. And, he's very great at reading them. Is this one of my charts or your charts? Okay.
That's mine.
Okay, get it up. Let's get that. Because what I want to open up is the spider, SPY.
Okay.
I want to show you something on that chart, because to me that really is the most important one. People open up garbage charts for no reason, in my opinion. So let me just open it up to make sure that it's in the window. That's your screen. It says your screen sharing, so you're not seeing mine or no?
No, you have to click on your desk. Okay, there's Zach's I'm seeing now.
Okay, oh, you're getting it? Okay, let's get to the spider one.
It's blinking.
You know what the problem is? I think I have too many charts open, so maybe I should close them. Let's get to the important ones. I wanted to show you the GLD chart, the XO. Okay, do you see this chart?
Okay, we got the SPY now.
Okay, you see how these corrections are happening, right?
Yeah.
I mean, have you ever seen it hit the exact number 180? I mean, it went a little bit under in, I believe, what is that? The end of August, and on a lot of volume, right?
Yeah.
But in my opinion, if you look at the short squeeze numbers, right, from February 14th, the market is up 16%, right?
Yeah.
The short squeeze is 12%. So we're talking about 4%. Where is that? It's incremental buying. It's nothing else than incremental buying. So people want to explain, oh, look, here. They're going to say the breakout's going to happen right here, right?
Yeah.
The breakout hasn't happened yet. So it's way too much speculation. You're asking your clients to take a really big risk, and I wouldn't do that. You know, people say buy low, sell high. I like the idea of buy high, sell higher. Honestly, it's just why take the risk? Everyone's looking for the bottom. Everyone's looking for the bottom. Why take the risk of finding the bottom? Let the market make the bottom and then buy while it's on its way up. You know, people just have this wrong idea of the market. And if you look at it, look at the market going up to, the SPY is going to 210 on low volume. I mean, the volume is almost ridiculously low. How can you justify such an increase? We're talking about a good, 7 to 10, maybe even 15% increase from the lows of February till now on such a low volume. You know, we should be seeing the volume up here, over here, to at least justify why the SPY is going up so much. The justifications are wrong. In my opinion,
rubber bands can stretch longer and further than we think, can't they?
Of course, the cyclicals, the old. See, people forget that the market is always changing. The market is changing every single day. So if you're going to use old instruments to predict, new markets, it's not a way to go. It's not, in my opinion. You always have to change with the markets. If you're not, you're losing, in my opinion. The market is different every day. Like a couple months ago, I thought the market was going to take a huge hit already. I was wrong. The market rallied. In my opinion, it's a lot due to the government and this and that, but whatever. That's the case. The market. I like to take what I'm seeing as of now. Correct? What's the point in predicting? My future outlook is obviously bleak. But the point is that, in my opinion, this is the precursor of what we're looking at 6 months, 7 months from now.
So let me ask you this. If we got back under looks like the 50-day, or this is a weekly chart or daily chart?
Yeah, we have the 200 and the 50-day.
Okay, so the weekly 50-week is at, say, 2,000.
Yes.
We got back under that, the market. Would that be a catalyst that this rally is over? Is that a demarcation line?
I think that would be one of the best indicators, yes. But, we have to see if it breaks through this number. If it breaks through resistance over here, then possibly we will see it go to the upside, but not 25.
A lot of wave guys are talking 22, 22.35.
See, okay, 22 is not, to me, absurd, but 2,500, 2,400, no way. We're not seeing S&P hit 2,500 this year. In my personal opinion, let's not forget, this is all my opinion, so your viewers don't think that.
Don't worry, I'm not going to sue you if we go to 2,400.
But do you personally see? I just don't. I don't see any fundamental or even technical reasons for why it'll hit that number. Yeah, if you want to do the reverse and put this upwards, yeah, it's going to be at 2,500. But that's such an old school way of thinking, and the fundamentals need to match that somehow. For me personally, I always looked at technical analysis as when to buy a stock. I use fundamentals to pick whether it's fundamentally sound, whether it's a short or buy, and literally technicals for when to go in. If you're going to use technicals if the stock is healthy or not, I think you're going backwards. It's not the way to look at it. Let
me ask you this. there are a lot of oil shares that still have very weak fundamentals that
Yeah,
skyrocket.
I wanted to bring up.
Or something like Freeport that people were thinking might even go BK because of their debt load, that more than doubled, almost tripled. So is that always true that fundamentals have to be strong for a market to
Not always true
recover?
because don't
Yeah,
forget that just the market going up itself can drive other stocks up as well. Like a lot of
yeah,
small cap stocks go up when they're not supposed to be going up because the economy is doing well. So, one thing that I've learned is that, in an economy or even a rally like this, it's going to drive stocks that are undeserving to go up. But one thing I also know is that when the market takes a hit, everything takes a hit with it, and that means the good
right.
stocks as well. And that's why I like to.
But the weaker stocks are more vulnerable and
Of course.
more vulnerable to more of a precipitous decline than the relative strength.
100%, 100%.
Okay.
And that's why the
Got it.
small cap stocks, that's why I'm always saying be more liquid. A lot of traders want you to be, what, 90% of your portfolio being invested in the market. I think that's a big risk. I think there's no reason for that because right now the VIX is very low, right? So technically you can use protection right now at a cheap price if you want to go long during this rally. But this rally, like they say in May, you sell in May and go away, right? So
Yeah.
April has what, 2 weeks, 2 weeks left. We don't know how May's going to look. From my projections alone, May looks, we can really see like we had August last year. Let's just say 200% of what we saw on the short side in August last year. We can see a synonymous thing happen this summer, in my opinion. We don't. The problem is that we just don't know when it's going to happen. So I always,
That,
tell my friends
that's the art of it, isn't it?
exactly.
The
And
when, not
and
the if, but the when.
And I hate when people say, oh, I know for a fact, because nobody knows for a fact, because we don't know when it's going to happen. Because in my view, it literally something like a trigger has to happen, and then we'll see a death spiral. Because right now we're in the position right now for a death spiral. One thing happens, some margin calls happen, a sell-off happens, because I mean the short squeeze itself speaks for really the economy. I mean Janet Yellen coming out saying, oh, we're going to raise interest rates 4 times this year and then only raising it once. I mean, these are just really, really bad indicators of the overall economy. And if you want to get into unemployment, I mean, people they keep touting this number of 5.6%, but they continue to lie to the people and say, oh, we're not mentioning the people that aren't looking for jobs. We're not mentioning the people on welfare. We're talking about 94 million Americans that currently don't have jobs, that are dependent on the government for some form of aid. If you're telling me that's sustainable, then I'm sorry. I guess I'm living in the clouds, because
Let me ask you about this, and I'm interested if you have an opinion. Margin debt on this rally exceeded the margin debt of 2000, 2007, and recently margin debt has been declining.
Mhm.
So is that, I know some people think the fact that margin debt, it's still above the '07 highs, but it's declining, that's a sign of people starting to lose their enthusiasm. What's your take on margin debt?
I
And
think people always like to find little things to prove their points. You know what I mean? They're always going to say, "Oh, look, the margin." If it does substantially, then I would agree. But to me, this is just so incremental that it's not substantial enough to say, yeah, the margin debt is starting to, diverge and it's starting to change. Because right now it is at the '07 levels, and right now it is at the 2000 levels, which means we're looking at another crash like we saw in the
it's
tech boom of
above,
90. I'm sorry.
much larger than those two time frames.
Exactly, exactly. And we're only seeing incremental change. Unless we see a very substantial change, then I don't see a good, justifiable, pragmatic, reasonable argument for why to be enthusiastic. The bulls will always find something. What I like to do is look at the market as it is now. It's rallying. Let's be long a little bit. Protect yourself by either using puts or the many different strategies you can use by sell stops. I'm sure you know all these. I'm sure your viewers know all these. But because of the fact that it's very cheap to protect yourself because the VIX is so low, I would protect myself. I would not just be openly long without at least protecting myself on the short side.
Okay. Were there any other? I think you said you wanted to show us. Here's
Well,
XOP.
I think I took out the spider oil. Do you see XOP?
Yes, got it.
So my personal opinion is that if oil can break out and stay above 40, 45, then we're looking at oil going back up to not look. People think that everything happens overnight. Not overnight, but by the end of the year, I don't think oil will be under 65. Oil should end the year even possibly as high as 85, but that's a very high prediction from what we're looking at now. But if we break out above 50, we can see oil skyrocket, especially with the market collapsing, as I predict it will, by at least the end of the summer. But the problem is that it might not happen until Obama leaves the office, because we might not get the real numbers until he gets out of the office. You know, that's the problem, is that the Fed is not releasing to us what the economy really looks like. So until we have an actual Fed that is a separate entity from the executive branch of the government, then we're really not going to know what's going on. We can all predict and speculate, you know, but speculation is great. But at the end of the day, you know, we want to go based on data that we can make correct, not correct speculations, but at least educated speculations. You know what I'm saying? I'm sorry.
Okay, so then let me ask you this: speculate on the U.S. presidential race. What's your take from Florida?
Well, I think that's a big problem for uncertainty within the markets. You know, and that the fact that we're rallying.
I mean, you have a Trump sign. I know you don't have a Bernie Sanders sign.
Oh no!
Knowing what a capitalist you are, he'd be attacking your accounts. He'd do a means test on you and pull out make capital gains short term at 50% and charge Wall Street a ticket charge and everything.
We both can agree on one simple fact, that capitalism has taken more people out of poverty than every single government social program combined. That's a simple fact. It's not about whether capitalism or socialism, it's about what works. And my family, coming from the USSR, is literally, you know, shaking when they hear Sanders speak, because it is so similar to what they heard in the USSR, that, you know, they literally left and risked their lives to escape such an ideology, only for it to reach the shores of the very country they escaped to. I mean, it's really horrendous what's going on in America. Obama created such an environment for unemployment and underemployment, and the things they're teaching in colleges. I mean, they're not teaching anything in colleges. I mean, how are these kids going to be prepared for the real world if they want safe spaces? I want you to go to, you know, any financial.
All they have to do is spend time in our community, and they'll learn how to trade.
Oh, but they never will, because
save their 100K from going to college and learn how to trade.
But they never will. And you know what? And college is even more expensive than it ever was. So now we're asking parents to spend $250K in an undergraduate degree, probably another $200K on their master's, because kids nowadays have nothing better to do than spend 8 years of college, and then another 4 in law school, or 3 in law school or medical. Who knows? You know, I'm 28 years old. Most of my friends to this day don't even have a career. They just don't. And to me, that's a sad fact that, you know, I do come from a wealthy area, wealthy town. You know, thank God my father came from Russia and really worked his butt off to achieve success. But, you know, when I was 16 years old, my father, the first thing he said to me was, if you don't get a job in the summer, you're not getting a dime from me. And, you know, through that, it taught me work ethic. And a lot of people don't understand that, because most of my friends in the summertime, their father would be like, oh, how much money do you need? You know, here it is. And that, to me, is really the larger picture of what's going on with my generation, of this, I'm entitled to things. You know, you're not entitled to anything, and you're definitely not entitled to other people's labor. Let's just put it that way.
Okay. Well, it sounds like you had a nice safety net.
Well, you know, thank God, you know, my father cut me off at 18 and said, you know, you have to make it on your own. And I'm okay with that, because if he hadn't, I would be like the rest of my generation from my town, which are bums and live off their family. And I don't ever want to be that way. And
so who are your friends if your contemporaries are not kindred spirits? My generation, you hang out with old guys like your dad and me?
Well, honestly, most of my intellectual conversations in Florida happen to be with, you know, older people, because, you know, people in my generation, they don't even know when D-Day was. They don't even know simple facts about history, and that's honestly a very sad thing for me. And I
It
love this.
wasn't D-Day Deutschmark Day?
You're a great guy, Dale, and you know what? You have some great interviews. You handle them so well, and you really get into detailed analysis. And my father would be great with that. You're gonna have a wonderful conversation with my father. But do you understand the whole compliance issue?
Yeah, it probably wouldn't work because he'd have to have everything he says approved by compliance. It would have to be a scripted interview.
No, no. Look,
Probably,
I told him that Dale is not gonna have a scripted interview. I didn't ask
yeah,
him. I didn't ask you any question that you were gonna ask me because I
yeah,
like
I
it that.
know.
I don't want to know
Yeah.
what you're gonna ask me. I want to prove that I can answer.
I want people to think on their feet. You know what I mean? You can
No,
have
yeah.
you can prepare for it with what your message is, but to have a series of listed questions to me isn't an interview. It's kind
Of
of like
course.
it's like being pen pals.
It's like politicians going to, the
Oh,
reporter. What
teleprompters. Yeah, it's like having a teleprompter, right?
exactly? And to me, that's not a correct way of actually getting someone's truthful opinion. And that's what you're
Yeah.
looking for. You're
So
looking
you're a
for.
bear that's not fighting momentum, advising people to protect themselves now, the VIX being at 13, wherever it is. You think that eventually the market's going to revert to the mean. That was a pretty impressive look of the weak volume during this rally, and it's just a matter of momentum being cracked, and you and I and everyone else on the globe have no idea what the catalyst will be for this upside momentum to stop.
Of course, of course.
Maybe
And
it's
I
going
do.
to be I mean, with talking about $85 oil and
Mhm.
your belief, and this would fly counter in the face of a lot of people. A lot of people would think if we got to $85 oil, that would be very bullish for the market because of the composition of oil shares in the S&P. You're saying that we could go to $85 oil and the market could be under severe pressure because of it. That makes
Of
me
course.
think that there's some geo event that could drive both
Well, think
that we
of
don't know.
Doha. Think of all the geopolitical events. I mean, the Iran deal was a complete farce. They're doing entirely what they want. I mean, the fact that this president signed a deal with people that are laughing in his face, shooting off ballistic missiles, and he's still okay with the deal. Still gave him $150 billion. We're looking at the Middle East being even more dysfunctional than it is today, which is which is a really big
So
statement.
are you going to stay away from the polls, or are you going to support whoever the Republicans nominate, even if they have a contested convention and take the nomination away from
I'll
Trump?
tell you the truth. I think that the whole argument of it's the rules doesn't look good. It just doesn't look good because it's the rules is not allowing the people to vote. So in a representative republic, which this is, we are a constitutional representative republic, we're not allowing people to vote in Colorado and Wyoming. And for the RNC to defend that, to me, is defending the indefensible. You're basically saying, oh, you regular people don't matter, your votes don't matter. Our 14 special or 44 special delegates in Colorado, they're the only opinions that matter, and they're all going to Ted Cruz, which I don't mind. I do believe Ted Cruz is an outside. He himself refers to the DC as the cartel. He himself admits that the lobbyists are writing the laws, and that is a major problem in the United States. That lobbyists are literally writing the laws that our politicians are bringing to either the Senate floor or the House floor and saying, "Oh, please, we have to pass this law that a special interest group wrote." I mean, it's unbelievable. It's crazy. I cannot believe it's going on in the current, U.S. government. I'm surprised that I'm so shocked because I love this country so much, and I'm looking at the markets and I'm looking at just what I see as misrepresentation. It's almost like they're defrauding the people into believing things are much better than they really are.
Well, I want to thank you very much for being with us, Lawrence. And the interview could have some very present timing because I think at least short term, I'll do a notes for Pinkert that we're putting a high in the S&Ps today. For at least maybe a pullback to 2000 in 2015, whatever the 200 moving average is daily. And what's the best way for people to follow you? And do you have a business model? Do you teach people how to trade? Do you trade for others?
Well, I've
Why?
been so focused on my writing and getting into that.
Okay.
But people can always follow me, for my Jerusalem Post articles because I do write about overregulation a lot. I do write about just markets in general. I mean, my overregulation article was basically this, established businesses can afford the 10,000 new regulations the government gives them, but if you're a small business, right, and you want to compete with these larger corporations, how can you afford the costs of the regulations that you have to abide by, the lawyers that you need to hire? So it's to me, it's just not. It's a non-competitive environment that's literally favoring the established businesses, and we're calling America the free, free capitalism. I mean, free market capitalism, which it's not. And I have a big problem with that, and I believe that regulation is really causing this problem.
Well, thank you so much for your time today, Lawrence. You could follow Lawrence at Larry, Polya 2Z. Is that correct?
Larry Polya 222
Two
at
two oh
Gmail.
3 2s. Okay. Why
Yeah.
3 2?
Well, my birthday is February 22nd.
Oh, okay. Well, l'chaim, Lawrence.
Thank
Nice
you
to
so
meet
much.
you.
And have a wonderful day. How'd it go? How do you think it went?
I think it was great. I think that you're a natural speaker. How about that?
Thank you so much, though. I really appreciate that. And have a wonderful day. And email me whenever you have the time for my father, because I really think that you would have a wonderful interview with my father.
Okay. It's great to see a son who admires his dad. You're very fortunate in this country. A lot of young men are growing up without fathers. It cripples them. It's something I had to overcome. And
I'm so sorry.
count your blessings that you had a role model like your dad, and that's why you are who you are today. And
So
I'll
you've
close it with that.
achieved a great lot, and I appreciate your time. I appreciate the interview. I appreciate everything, and have a wonderful day. Thank you so much again.
That was Lawrence Polyakov, and
That
you
is
could
correct.
follow him at Larry Polya 222 on Twitter, or go to the Jerusalem Post to watch his and read his writings. Thanks
Thank,
again, buddy.
thank you so much. Have a wonderful day.